What exactly is going to be the focal point of this meeting coming up tomorrow and Friday?
I think the key thing is what happens on Friday and what the communique states. So it's not just about the agreement, but the actual wording. Do they say that they're going to cut production, or do they use some more general language saying that we're going to respond to customer demands, and they don't necessarily spell out the baseline for the production cuts? So I think that in order to have sustainable gains higher, the market needs to see those three C's: clear, cohesive, and collective cuts where everyone's on board.
This is your wheelhouse. You are an energy analyst. You've got Russia and Saudi Arabia. The media reports have been perhaps a little bit unclear, a little opaque. Sometimes we hear that Russia and Saudi Arabia are pretty close to agreeing to production cuts, and then reports come out shortly thereafter that they are maybe not as close as they thought they were. What exactly is your sense about how that plays out, given that Friday meeting between Saudi and Russia?
This OPEC agreement is far from a done deal. Saudi has a very weak hand going into this meeting. They need this deal. They want this deal more than anyone else, and the market recognizes that. They are in a much weaker position than they were in November 2016 when the original crash happened. So their foreign reserves have come down. They very much need to bolster the oil price to manage their fiscal budget. By contrast, Russia has benefited from a weaker ruble. They've lowered their break even. So they're flexing their muscle in terms of being reticent. The number that they've floated in terms of what they've been willing to cut of about 150,000 barrels a day, that's not enough to get to that 1.3 million that Brian was talking about that the market really needs to see. That being said, it's in nobody's interest for oil prices to go below $50. And I think that OPEC plus Russia recognizes that failure to get a deal done here is going to cause prices to go into the $40 range, and that benefits nobody.
Tamar, the trading action for the last couple of weeks, arguably, has been all in anticipation of this big meeting coming up tomorrow and Friday. There is a two-step, the OPEC two-step, I like to call it, where there's a lot of jawboning and ratcheting up of tensions and rhetoric, and then walking back, ratcheting up, walking back. We haven't heard as much out of the Saudi side of things as of late. What does that tell us about how these negotiations are going to go?
It tells us it's really all about the art of the deal and what these heads of states are going to put together. We know that the Russian corporates have been reluctant to get on board. Putin is the one person in Russia that could herd the cats, so to speak. I think he does benefit from having the more increased trade deals that he's had since he's gotten on board with Saudi in November 2016. But it really all comes down to what the two of them can agree to. We've seen fractioning within OPEC from the smaller members. We also know that Saudi's hand is a little bit tight because they don't want to ire the Trump administration in terms of speaking to direct and explicit production cuts. So they're going to have to walk a fine line between managing the market but also managing their relationship with the U.S.